Welcome you all. In this session, we have launched free private equity course on YouTube. So far we have uploaded almost 14 modules, which are short modules, and that covers lots of private equity content. So again, in this module also we are going to discuss about the one more critical concept. Which is step change in a private equity. So what is this actually step change, and how its impact on financial statements, or why it matters? So we'll discuss that in details. So let's try to understand what is step change. So I'm sure you would have you know you would have heard that if you have worked in private equity accounting, or I would say private equity fund or fund management business, then definitely you would have heard this step change in a P accounting. So ever seen a startup value double overnight? That's a step change, right? So what it means exactly? So if you see the sudden price change in a security prices, so which could be, let's say, increase the price by 2x 3x, or which could be like overnight only the stock price which has been changed like very drastically, I would say. So that price change, basically we can call it as a step change. So for example, to understand this step change in details, for example, let's say a company valued at 50 million jumps to 100 million post investment. This is something step change, and it must be recorded accurately in the funds book. See, whenever funds invest, definitely you can see the change in valuation of startup companies, and post the valuation change, actually private equity funds, they evaluate the security prices and ask accountant to update the same value in the books of fund to ensure that their portfolios are updated as per the market value of an investment. All right, but sometime you can see due to sudden change in price that actually lead to the step change. Now if I talk about impact on a statement and why it matters, a step change affects the balance sheet, NAV calculations, impacting investors reporting and fund valuations as well. Accurate reporting ensures compliance with IFRS. So it means funds basically follow the IFRS GAAP, UK GAAP, or any local accounting principles. So again, everything it will impact, because this is something step change which is related to the valuation of investments, and that directly impact on financial statements. So it should accurate, it should means the record the transaction accurately in the books of accounts, otherwise it will impact on NAV value as well. Now if I talk about the real example, just for your reference, do you have any real examples to understand? Yes, we have a real example. So SoftBank's Vision Fund saw a steep change in WeWork's valuation before its IPO strategies. So what was the case and why this happened? We'll try to understand this. See, basically what happened in case of WeWork, as we know about WeWork. So WeWork was basically the workspace based company. So we have means seen the very steep change in price of a stock. You can say, for example, let's say stock price at the time of investment it was 100 USD, but post investment the stock price which has been changed from 100 to maybe 5 USD, or it could be 1 even, and even 0 as well. So it depends basically. So that change you can consider it as a steep change. All right. So now we have a case study of SoftBank. What happened in case of the SoftBank? You can look at this chart as well. So how it collapsed. the share price which was at 527, right, in 2000 October 2021 2022. But after that, if you see, continuously stock price which has been gone, the down, and finally, in 2000, basically 24 somewhere, I heard that they have announced even bankruptcy as well, because the stock price which was reached to the zero. And the most of the private equity funds, they have followed the process, where they can announce like step changed, and update their accounting books of records as per the the new valuation, I would say. And this was something, I would say, it was a very worst, the investments in 2023. So now, let's understand this case, this saga of WeWork. WeWork, the price which was at $1 again, so which we call the most ridiculous IPO of 2019, reached its logical to those the analysts fundamentals conclusion when the company officially filed for a bankruptcy on November 6, 2023. The bankruptcy is a massive fall from grace for the company once valued at $47 billion. Just imagine, $47 billion becomes zero. WeWork reveals the ugly side of the easy money unicorn era. SoftBank first pre-IPO investment in WeWork was at a valuation of 20 billion. SoftBank doubled down soon after the invested, more at a valuation of 47 billion, the high watermark for the company and the value at which Wall Street originally tried to sell the ill-fated IPO. When WeWork first attempt failed, and we called it a win for Main Street, and we did not expect they would get another chance. And just few months after trying to sell the public on a 47 billion valuation, SoftBank marked the valuation of WeWork down to just 2.9 billion. See, from $47 billion to $2.9 billion, it was, huge change in the valuation. And that SoftBank fund, basically, they reported it. Why they reported? Because Wall Street would try and sell a stock at a 47 billion valuation when it's worth under 3 billion. And what else might they try to sell you? As we wrote in the unicorn bubbles is bursting, the rise of massive venture funds like SoftBank Vision Fund, driven by ultra low interest rates, created an environment with more capital than profitable investment opportunities. And WeWork epic rise and fall epitomizes how irrational investors were willing to be as they chased return in those years of excess liquidity. So basically, in short, you might see lots of the cases where suddenly there has been change in price, or maybe it could be increase and decrease. Basically, that change we capture in a step change process and update the valuation of that particular securities in the books of account. So that's all I would say about step change. You may expect questions around what is step change, how it works, because step change, basically it's kind of the activity where wherever we see the change in security prices, or even in terms of partners also, if any new partners join fund at that time as well, the private equity fund basically announced step change. So step change is nothing but it's kind of a corporate action events for private equity funds if something happens. So basically we call it as a step change, and we take appropriate actions. If you're a fund manager, you should know what comes under step change. If you're a fund accountant, you should know the treatment, like what happen if something happen like this, and what would be the next course of action. And as a reporting analyst, again, you should know the impact of a step change on a financial statements. All right, so I hope you got it now, what is step change and how it impacts, and why we need to record it on the books of account accurately. So thank you watching for this. We'll see you next episode. Thank you. And by the way, if you're looking for a private equity course, we have a very detailed oriented course which covers everything. Then you can enroll today. I'll share a link in the description. So all right. So thank you very much for watching this. Thank you.